Hi, I'm Ben Elowitz. Welcome back to Razor's Edge. Today, I'm going to be interviewing Evan Kaplan. Evan is a serious career entrepreneur. He has been a startup founder, CEO, and executive for over 30 years. He's raised $400 million, and he's been CEO of Avantail, iPass, and InfluxData. He is absolutely one of tech's most resilient fundraisers. He's been through everything from big boom markets to brutal downturns, from the earliest stages of companies all the way through the IPO and being the long-term CEO of a public company. One of my favorite stories from this episode that he shares happened back in 2001, around the time that I was getting to know him. And he was running Avantail. They were cruising. The company had 400 employees. They were growing like crazy, and they were lining up for their next round, knowing it should be a shoo-in. The previous round had been totally oversubscribed. Optimism was super high. They even had Goldman Sachs prepping the S1. It was in absolute growth mode, and they were burning $4.5 million a month. But instead of IPOing, that's when the market crashed. All of a sudden, investor calls went cold. And at one point, Evan even received a voicemail from an investor who mistakenly left it on Evan's line saying, "This guy doesn't know how to raise money." It was humbling. It was painful. But Evan is so resilient. He turned things around, rebooted, and ended up raising one of the largest rounds that year of $55 million. Evan, you'll see from moment one in our interview, is a standout operator. He has undeniable authenticity, grit, and he's got this deep sense of curiosity to really care, how does the other side of the table work? And that's exactly how his playbook for fundraising works too. I think you're going to enjoy Evan's stories and his great candor. He is an open book and shares everything from his own imposter syndrome to delivering authenticity when you sit down with a counterpart in your raise. So get ready for some hard-won, actionable insight on navigating venture relationships, improving your odds of success in the fundraise, and I think most importantly, keeping your energy up even through the brutal and near-death moments. Enjoy. Evan, thanks for doing this. Thanks for hopping on today. How you doing today?
Good. How you doing, Ben? Great to see you again.
I'm good. It's great to see you. And I love talking to you all the time, but I love talking to you about this because you've got a really well thought out set of beliefs and playbook and everything that I can't wait to get into. So this is going to be a fun conversation. Let's start with some fun, kind of fast-paced lightning questions. So what would you say is your fundraising superpower?
I would say it's credibility, authenticity, and credibility. I'm clear about what I know, what I don't know, where I think we're good, where I think we're not so good, and where I think the opportunity is. And I feel like I can convey that in a straightforward way.
Awesome. Do you love fundraising or dread it?
I don't love it. It's obviously a necessary thing. It's fundamental oxygen to any startup company, any venture-backed company. But the process is really excellent in terms of refining all parts of your story, all parts of your go-to-market, all parts of your communication to employees. It's actually a really, really rigorous and useful process, despite people constantly dismissing it.
That's such an optimistic view. It's like, I don't love it, but I sure am going to at least look on the bright side of all the things it gives me.
Because I get a chance to reflect back on, the different fundraisings and how by playing your story in front of lots of smart people who know lots about markets and lots about businesses, the story evolves and everything matures. And usually the deck that I've started with is nowhere near the deck that I end the fundraising with, depending on how many different capital sources I have to talk to.
Yeah.
Yeah.
Is fundraising a relationship or a transaction, in your opinion?
Has to be a relationship. Yeah. Has to be a relationship. And there's a way to measure that relationship.
Who do you call when you're stuck?
So, if I've already raised money and the company already exists, I'll talk to a board member out loud. somebody who sits in the sort of capital allocation seat, so has been through it. I'll talk to people like you, fellow peers, CEOs. I will, talk to members of my executive team. I'm good at thinking out loud, and I'm good at getting feedback because I need it. I wish these things came out fully birthed, but they don't.
Totally. Where did you get most of your knowledge about how to raise capital?
Wow. I think it's just doing it. You and I have different beginnings, but, I started out with my partner in Seattle raising a $750,000 seed round. And I didn't talk to anybody who knew anything about anything, and, did the first deck and just sort of did it, and then proceeded to do it probably now 40 times in my career with different rounds of financing with different kinds of companies. And so it was largely experience based. And you'd like to think it's you and the personality, but it's also the vehicle you're driving. Like, do you have the business? Do you have the story? Do you have the opportunity? So I like to think I'm magical at fundraising. I think I'm pretty good at it, but without the vehicle, it doesn't matter.
40 rounds or so, 30 years you've been in startups, public companies, private companies. And when you walk into a VC meeting today, because you're back running a private company today, I'm genuinely curious, when you want to kind of earn the VC's strong impressions of you and the company in your first couple minutes, and you have to give that self-intro. Play it out for us. Like, how would you introduce yourself in a VC meeting today?
Ben, it's like any sales process. So independent of raising money, right, is how do you establish that credibility and authenticity up front? So in the old days, there was no LinkedIn, right? You'd show up and you had sent them a note, an email that had said a little bit about your background, or you were introduced by somebody. So it's rare that you're showing up to many of these meetings where they don't know who you are these days or what's going on. So usually it's a matter of filling in the gaps. And so I'll spend 2 minutes talking about sort of my non-traditional background, growing up in New York, spending most of my 20s climbing, working for Outward Bound, doing different stuff, not having a real job till, my late 20s, and working in aerospace, and then working in the early days of networking. And then I'll talk about, why I started my first company, because I'm not the kind of person who's great at working for other people, and tell them the story of Aventail and that journey from a unicorn to a complete failure to something that finally was useful, to running the public company, to now running Influx and advising other entrepreneurs. I try to give them, in a very short period of time, stuff that they can buy. They can go like, okay, this guy's even worth listening to, right?
It sounds like you go all personal with this personal journey piece of it, rather than trying to wow them with the amounts of money that you've raised, managed, earned, returned. You figure all that comes through on LinkedIn?
It's not my style to talk about that stuff or to talk about these major accomplishments or things like that. My style is to make my journey seem like something you could comprehend and relate to. And it works most of the time, but sometimes it doesn't work. Sometimes, they want somebody different, and that's why it's a relationship game. But that's my style, is to talk about who's this person who's about to talk to you. And so is he worth even listening to? Like what life experience, what technical experience, is he even worth listening to? I think that's the first thing that has to happen in the room.
Like, that's very different though from 5 and 10 years ago during kind of peak bravado, right? When HBO Silicon Valley was being run and everybody was told to kind of walk in and be kind of showing all your accomplishments, being in the model as some of the CEOs who became the most iconic and then kind of flamed out, right? Like, I feel like the trend has shifted.
I wonder if it's the trend that shifted. I think there's still, in this AI revolution, I can imagine people showing up and saying, I've done this and I've done that, and you'll be lucky to get your money in this deal. And that, that's if you're in that kind of fortunate situation, I still don't think there's any harm in being a humble human being, right? And I don't have some false humility. I'm old enough that I've cultivated real deep humility, because there's not a mistake I haven't made. And there's not a mistake I haven't made at least twice. So when I come into those situations, I want that openness, that humility to show, because I think it reflects a certain confidence also. Like, I'm not hiding mistakes. I'm not putting on some veneer. This is the person you're going to invest in, and this is a relationship you're going to have if it works.
And back to the first question about what's your superpower and credibility, like you are totally holistically oriented around being very authentic and just saying, hey, this is who I am. It's interesting because credibility, I think, is the number one criteria for any CEO, any prospective entrepreneur that a VC invests in. And I think there's a lot of paths to it. So for some people, some VCs are so sensitive to pedigree. That was a word that so many VCs use. And I think for some entrepreneurs, it makes sense for them to play into that and say, well, look, I'm from central casting and I've got the markers that you look for. And I think in some ways it's a little more courageous to not fall into that, but there's a lot of effectiveness to saying, look, I'm going to lead with who I am like you did rather than what I've done.
Right. It also helps that I don't have that classic pedigree, right? I went to a state school. I'm surrounded here in Silicon Valley by people who are way smarter than me. Like, it's just, so to pretend that I'm some sort of pedigree thoroughbred, I couldn't get away with it.
So let's go back. Let's kind of talk a little bit about your background. When you were getting started with Aventail, what were those first couple of raises like while you were kind of learning the ropes?
Oh, brutal. Yeah. Now that you're a dad, we can have this conversation. It's like when your kid's really young and you're going through all this stuff, you're changing diapers, you're not sleeping, it's a blur. And now if you're asked 10 years later, it's hard to remember, like, what was all that like? But it was there, and it was hard at the time, but no. So that's the way that all that feels. But the truth was, I think I got coaching, I don't remember who, but that you treat these fundraisers like they're a sales process. And so you just wake up every morning. It's the first thing you do. You set up these meetings. You follow up these emails. You eat a ton of crow. Like, you get insulted by a 23-year-old who's between college and business school. You get told you have to really learn to sort of eat a lot of crow. And inside you go, well, I'll show you. But the first fundraiser was angel fundraising, which I knew. I had been involved in the early days of a big trade show called Interop, and the guy started it, and he backed us. And so I had some credibility with that, and I use that wherever I can. But the first institutional raise, I think I did 70 separate meetings. I did 7 meetings with Sequoia. And at the time, they said, we like this, we could consider funding it if you consider not being the CEO. There's so many ways to be insulted and hurt by the process that you just, and it's the first one.
Did you take it personally? Were you hurt or insulted?
Sure. 100%. You're out there, you're exposed. You really barely know what you're doing running the company, let alone raising the money. Like, it's all, any CEO is telling you these first raises don't feel like an imposter syndrome. Even more mature CEOs, even way later in their life, say it's not imposter syndrome. I don't think are being truthful. No, I was hurt. Oh, yeah, my feelings were hurt tremendously.
I feel like I remember the movie Gravity with Sandra Bullock and George Clooney, where Sandra Bullock almost dies in like 12 different kind of labors of Hercules that are all deadly on her voyage back to Earth. And I feel like entrepreneurs can be like that, where there's so many times we had near-death experiences.
There is a funny story. I can tell you a funny story about that. 2001, the world is falling apart. I've got 400 employees. At the time, I'm burning $4.5 million a month. The previous round we had raised was like, I think it was 48 million. Don't hold me to the exact number. And it was a pretty high valuation. And I thought, man, I'm kind of good here. I own a significant portion of this company, way more than most entrepreneurs would own today. We are flying and we're winning customers and we're investing all this capital. And that round that I had raised during that period of time came so easy. There were people trying to put money in our thing. So you know what it was like. It was like late 99. And, we had hired Goldman and we were going to work on our S1 and we were, life was really, really good. And then, what happened is, shit fell apart badly. First for the consumer companies and then for us, the infrastructure companies, internet companies. And it took such a while to realize how fast that knife was falling. And going back to the existing investors and talking the ones who had wanted to invest and reaching out and nothing, just flat. Just everybody's flat. Nobody wants to put money. Nobody wants to do anything. And we eventually raised a $55 million round with a lot of preference. And Fred Harmon from Oak, who to this day is a good friend, led that round. It was super painful. But during that round, one of the investors had called me and had left us a voicemail, but it was to me. And the investor was saying, this guy doesn't know how to raise money. And he was like, oh, I can't tell you how painful that was. And the reason I didn't know how to raise money is because I didn't realize how fast the knife was falling, what expectations had changed. And it was so humbling. And it was pretty hurtful for me because I thought oh, I'm pretty good at this, but maybe not.
But by the way, just getting a $55 million round done.
It was one of the largest rounds done that year. It was crazy. Yes, I got it done.
That's crazy. What do you think makes you exceptional today? And it's not just the sales process. There's something about you, right?
So to the degree that you'd say I was good at this, right? There are probably 4 or 5 things that I think really matter to me. Number one is you have to know how they get paid. You have to know how the investors, the capital allocators, the debt providers, you have to know how they get paid. You have to deeply understand what motivates them. And you have to cultivate that understanding with curiosity. I was raising that first round. I didn't know what 2 and 20 meant. I didn't know how they want to construct a portfolio or how much for follow on. When you're running a $250 million or $500 million fund, whether you're Benchmark or whether you're Andreessen, you get paid a little bit differently. And you can unearth a fair amount of that early on, right? So understanding how they get paid and what they're looking for in an investment and what gets them going, what's exciting. So what's adjacent? What have they invested in adjacent? What have they seen? What's worked for them? What's failed for them? And this is natural for me because I'm curious. I'm just a curious person. I'm really interested. Particularly if I like the person, I'm tell me, and the good people, they're comfortable talking about it. The second thing is the investment is in the entrepreneur's unique point of view. Do they see something other people don't see? And can you resonate with it? So have they provided you with some understanding of a market and a framework and then provided an insight into that you feel like is unique? Because if there's no interesting point of view, right? And the other point of view could be anything. Could be these margins are too high with all these other providers. If you could just do this, you could drive them on. It could be this space in this market because I've seen this problem. I've worked it. I've built it. If you can get that point of view out there and clear and then start building around it, that can be a really, really powerful thing. And the way you get that point of view out there is you describe a world they can understand. So the first part of it's all the world is doing this. We're seeing the dramatic increase in AI, whatever the factors are, they get it. So the head's shaking. They're like, this makes sense. This makes sense. And then you put the insight into, so what does that mean? What do I see that other people don't see? So I understand how they get paid. I understand the unique point of view. I can make my deck from there. I can do almost anything from there. It doesn't mean they'll buy it, but that's what I want to have happen.
What's an example of that? What's the unique point of view for one of the companies that you raised money for?
Oh, so Influx. Influx is the world's leader in time series data, open source time series database. So when I would go in, I want to check all those boxes so the credibility is there, not just from me, but from the company. We got 1.3 million open source users. These Salesforce, Cisco, Siemens, Honeywell, Tesla are our customers. We've raised money from these venture guys, right? But here's what we see. We see a market. We see the dynamics of AI changing everything. And AI has largely been about the digital world, which is really interesting. But AI is going to be about the physical world and is starting to be about the physical world. And everything that happens in the physical world is part of a generative automating loop. And it all starts with deep, deep, high-resolution telemetry. And you don't use general purpose databases for that. You collect, millisecond measurements at constant rate to see what the real world is doing. And then you build your inference models from that. And then you take action on it. That's a quick summary. And so do you agree there's more sensors in the world? Do you agree that physical AI is going to be a thing? Do you think robotics are coming? Do you think cars are going to drive them? You begin to go okay, well, this is interesting. Are these guys the market leader? Sure, they're the market leader. All right, stuff like that. Did you see how many times you nodded your head as we were saying that? Right, because it's not like these are magical things that nobody sees. It's just that
Yeah.
this is the vehicle and this is our point of view about it. And other people aren't articulating it that way.
Yeah. You've used the word sales process a bunch of times. Let's double click on it. What does that mean to you?
There's not that much difference between how I'd approach a top level customer and how I would approach a VC. I want to understand how they got paid. I want them to understand my worldview. So if they understand my worldview, they can understand the product I'm building and why, and they can most likely understand how that's likely to evolve over time. And they can see whether I'm a person of, for lack of a better word, gravitas. Is this guy worth listening to? Now half your audience has turned it off and decided that I'm not. That may be a counter here, but in general, you want to be that person who's at least worth listening to, and you want to be curious about what's in their world, even more important.
Yeah, which is a big deal, actually. I think a lot of entrepreneurs walk into a meeting feeling like they're going into the authority figure's office, into the principal's office, and the entrepreneur is down here and the VC is up here. You don't sound like that's how you walk in. You stayed curious about it. You weren't there to just answer questions.
Yeah, no, I had
to be curious.
That's just so ingrained in me. If I'm interested in you, well, my wife, and so she describes our first date as an interview, and so it's just who I am.
Yeah. Any tricks you use to help you move people forward?
Oh man. Yeah, you talk about the art of it. It's poker, There is it's honest poker, right? Where you try to create precipitating events, you try to create some urgency. If you've got a good business and it's working and people really want it, then that's pretty straightforward. But most people don't have that perfect match. Mostly you have to get people interested. You have to do it. You're lucky if you have two people interested. You maybe only have one. It's poker. There's no other way to describe it. You've got this hand and you play it as best you can. And these guys are smart too. These men and women are smart on the other side. They can figure out how much demand there is for this thing or not. And they feel the scarcity too.
I always wonder how people kind of ferret out the happy talk, oh yeah, great company, really interested, loved meeting you. Yeah, we should definitely, schedule next steps. And then yet there isn't real momentum.
Your signal leaving the room is no signal at all. And I know you're already shaking your head. I've walked into the room, I thought, oh my God, if these guys don't tackle me on the way out the door and try to hold me down and shove money in my pockets, and then I'm completely ghosted by them. And, you and I both work with other entrepreneurs, and I feel so empathetic because, in the VC's world, it's, you never spurn something, you never. Sometimes more mature VCs are much more decisive, saying this is probably not a good fit for us, and they're willing to do it. Most people just keep you going, watching the business, all that sort of stuff. There's no harm and foul in keeping you going, except I think there's a reputational foul. I think the good folks, they can say, listen, it's not in my wheelhouse. I'll do a little bit of work. And if I reach that conclusion, I'll let you know. And if they let you know, no, that's awesome.
What else is kind of in your playbook that when you meet with younger entrepreneurs that you get to share with them?
I feel like I'm pretty good at setting expectations about the process. Since you're fundamentally selling securities, when your security is well positioned in the right time, it can feel like you're the greatest thing. You're the greatest thing since sliced bread. And when you're a little bit off, you could feel like you've got some tremendously communicable disease that you should be quarantined for. And that's the entrepreneur's journey, right? Like starting with the assumption that it's going to take a while, that you're going to have to kiss a lot of frogs, that you're going to have to be disciplined, that, I typically say, like, you're going to have 40 iterations of this deck you think you got right. And I'll help you with 6 of them. But, also I'm very clear with entrepreneurs. There's this, sometimes in Silicon Valley, there's this tendency to dismiss VCs like, okay, they run in packs. They don't know that much. How can a 27-year-old know more about my business? I've been doing this for 20 years. And I just think that's completely the wrong attitude. In most cases, particularly in those first 10 or 15 pitches, I'm learning a lot by the questions people ask, and I'm dealing with objections and I'm thinking about them. And if I have some notion that, that I've got this all wired, that's just not helpful.
Back to that question about when an investor's losing momentum, do you try to jump in and change the trajectory? I've met some CEOs who say, no, it's just a volume game. If they're going to fall out, they're going to fall out. I'm going to let them reach their own decision, but I don't want to waste my energy on that. And that's a different approach. And I genuinely wonder, is one of those two tilts a better one? One is like, let me optimize every interaction, or let me at least be thoughtful about how I can really drive conversion with every opportunity. And the other is more this kind of fatalistic, look, I'm going to let the law of numbers play out. I don't know if you have any point of view about that.
Yeah. I think those are poles, but I also think the answer is not either or, right? I think the answer is it is a process. You need to maximize your funnel. You need to work and engage. And the bottom line, if somebody's pulling back, there's no harm, no foul by declaring to them, like, okay, like, I love the conversation. It's great to meet you. I need, let me know whether we should engage or not.
It saves everybody a lot of energy, and it wasn't going to change the answer to do any kind of intervention. No problem. I think I'm such a fighter that that's not my first instinct. And so I have a reputation for being on the tenacious side of things instead, and saying like, well, if the window's cracked open, we might as well see how much wider we can get it open. What have you noticed that gives you some idea of how interested they really are?
I have a foundational piece that I use here, which is the people I want to work with are people who do what they say they're going to do. So I want to be the person who does what I say I'm going to do, and the people I want to work with. And by the time you get to signing a term sheet and executing a deal, there are about 30 discrete steps people have to do. Listen, you like this, you're going to go do some research. I'm going to reach back to you. I'll touch base with you in a week. Have you done the research? You asked for some financial room. We put it in a data room. Have you actually gone through the financials? Do you have any interesting questions for me? Again, you got a symmetry here. You've done something, I've done something. You wanted the customer contact. Did you call the customers? Can you give me feedback about the call? And by this time, you've got this thing going. You've built this level of trust. And, it could still not be the deal they want, but you built this up. And I find that the people who I've most loved working with on my boards are the people who I built that trust with, who the process was, it wasn't super fast, it wasn't super long, but it was, you did, I did, you did, I did, you did, I did. And what I hate when I certainly listen to other entrepreneurs, and I've had it myself, is people don't tell you the truth. That's the biggest indicator.
On a kind of introspective note, so where does that get you into managing your own energy and your own psychology through the process that you've kind of learned over the years?
I'm probably better at it, and the swings aren't so wild. The trusting the process now that I've done a fair amount of fundraising on multiple vehicles, I arguably have as much drive. I don't have the same chip on my shoulder about it. Like, once you understand what their world's like, if they're good people, then you got a tremendous amount of empathy. I have some really quality people on my board who I respect and like. And listen, everybody's got their foibles, obviously me too, but I've had one or two rough experiences, but they weren't that rough. And through the process, they knew what they were buying when they bought. So when we went in struggles, they knew, like, okay, Evan's thinking about that.
I talk about to entrepreneurs, there's the bull case and the bear case. The bull case is like, hey, what does this look like on the success path? And that it's their job to give the bull case while acknowledging the risks, but it's not their job to weigh the cases or sit around obsessing about every risk.
That's right. That's great advice. Yeah, that's great advice. And that's typically what I do is like, this is the happy path. It's a really good path. I think our probability is high, but it's not risk-free.
And let the VCs do their job of weighing those risks and deciding which ones they can tolerate, right? Back to what you were talking about of what's their calculus. Right. On the other side of the fence, you've worked with Toyota Ventures, you've been at Trinity as EIR and part of the Trinity team helping them with deals. Are there things you learned about how venture capitalists think that you got to see from that perspective too?
Yeah, that was tremendously helpful. Yeah, I got to watch, I think when I was sat there at Trinity for 6, 9 months, I can remember, I got to see like 100, 110 deals. Like I got to listen to it, and then I got to hear the partners talk about it. Wow, what I would recommend that to
Yeah.
any entrepreneur, because talk about knowing your customer. Like, they had this ABCD ranking where A is where you tackle the guy before he gets out of the parking lot, and D is obviously not that good, and everything in between.
I've gotten to be a venture partner and had that experience too. It's like when I was a kid in math class and I'd stay late and the teacher would leave the room, but she'd leave the teacher's edition of the textbook open that had all the answers to the quizzes written in. It was the best thing ever, because then I could go home and figure out, well, how did they get that answer? Right? Are there any kinds of things that you saw happen over and over again with entrepreneurs? You're like, oh, fatal mistake. Any things you learned that are kind of commonplace where entrepreneurs kind of missed it, that you got to see on the investing side of things, but wouldn't have known otherwise?
What I saw a bunch was the over arrogance. Like, you'd be lucky to be in my deal, which even with the best of them, you're thinking that works, it doesn't work. And then the hyper timidity is like, wow, you took this meeting, this is great. And so I've seen fails on both of those. And so when I'm talking to entrepreneurs, you got to own the space in the room, even if you're feeling intimidated. You got to kind of own the space in the room as best of your ability. And the way you own the space in the room is knowing what you're good at. So maybe you're not the perfect CFO, you understand everything about the balance sheet or the competitive framework, but if you're great at freaking product, then be present and great at product. Like, these journeys are long. We're back to the world where you're not going to see an outcome for 10 years. Like, who do I want to be on this journey with? And you have to be good at assessing character. And so the more you can show about who you are.
And for entrepreneurs who get kind of run down by the process, how do you keep them energized when you give advice to them? What can you suggest that they can look forward to in the process?
I ask them the counter. So, what's your choice? You want to give, maybe this business is not that good, you want to give up? That's an option. So just hold that option in your head, right? And most entrepreneurs that actually do get money raised, that's not their orientation. And so they just realize, like, okay, the reality of the situation, it's hard. It's the way it is. This is where, some of my climbing experience comes in. Like, you're either going to get to the top or you're not. But, if you're not going to get there, let it be a force of nature that does it, as opposed to your own efforts and stuff like that. But, you kind of always get through it. Or at least my experience has been, you always get through it.
You're awesome. Thanks so much, Evan. Totally appreciate it.
It's great to catch up, man. All right.
All right. Thanks, Evan. Take care.
All right. Bye.
Bye. Just thinking over my conversation with Evan, I've known him for a long time, and it is such a reminder of just how much wisdom, humility, and grit it takes to make it through these fundraising journeys time after time. I love how openly Evan shares his journey, and he makes it clear that this work, this raising capital, it's not about bravado or pedigree or showmanship. It's actually about something much more personal. It's about being authentic consistently, focusing on relationships genuinely, and building trust by doing what you say you'll do. For me, if there is one takeaway, it's got to be his approach to understanding both yourself and your investors, even during the hardest parts of the process. When you're out there in the venture journey, raising capital, you're going to face setbacks, doubt, you're going to have curveballs coming at you. But as Evan said, most entrepreneurs get through it. So keep reflecting, keep iterating, and keep showing up with authenticity. Thanks for joining me for this conversation today. If you enjoyed the episode, of course, I'm going to ask you to subscribe on Apple Podcasts or Spotify or Substack. And fundraising is really hard. So if you can think of somebody who might need a bit of encouragement on their own entrepreneurial path, please do them and me a favor and share this with that person. I'll see you next time on Razor's Edge.